So the first question is a good one. Both the questions today are very good. I'll copy and paste it. And this person seems to think that penny stocks do not respond very well, if at all, to positive news. He didn't provide us with any examples, unfortunately, but this is something that is definitely worth discussing. So, what determines if news is positive, first of all? Whether it's a penny stock or a big board stock or a commodity or anything of the sort. Yeah, price action, i.e. the market. To me, the market is the only person that can determine if news is good. I have seen what I believe is terrible news come out on a stock and it goes higher. And I've seen what I believe is great news come out on a stock and it goes lower. Okay? So I've just learned to ignore my own opinions and listen to the opinion that the market is telling me to have. Okay? So that's first and foremost. Is that positive news is determined by the market. So if you have this mentality that a penny stock is not reacting to the news, it's one of two things. Okay? The news must not be as good as you think, because only the market can tell you how good news is. Vice versa, the news must not be as bad as you think. If you see, for instance, Hewlett-Packard, very good example today. It's a big board stock, but the same applies. You can see Hewlett-Packard announced that they're laying off employees and, they didn't raise their guidance or anything. So you might say, your opinion might be that the news is bad. Oh, that's bad. They're laying people off. But if you look, the stock was up 10% at one point today. Okay? So the market told you that the news was actually good, right? Remember, we need to remove our own opinions. Everything we do and everything we trade on has to be based on what the market is telling us to do. So that's the first thing. What could be the second part about this right here? What might be the second part where you don't see reaction to news? Or the reaction you might expect? It could be that. But I'm really thinking about the current state of the market. Right. Okay, so Chronic says low volume. What do we mean by that? Just think about the overall market right now. Think about the penny market right now. Low interest. Exactly. That is exactly right. Aku said it best. Crappy market, low interest. And when you have low interest, that translates to low liquidity. And when you have low liquidity, what happens is news comes out on a stock and we see it and we all say, man, that looks like good news. Now I just need to wait for volume to come in. And every one of us is looking at it, waiting for volume to come in. So what happens? No volume comes in because we're all sitting there watching. And we know to wait because the market is crap right now. So we don't feel a sense of urgency. Think back 4 or 5 months ago when the market was extremely hot. When you saw news come out, were you waiting to buy? Were you waiting for other volume? I wasn't waiting because I was afraid if I waited that I would miss my entry, that somebody else was going to buy it up. Okay, so I just jumped in right away because the volume in the penny market was very good, and I knew that it was good because I saw it going on every day because I watch my screens and I pay attention and I stay in tune with the market. So there was that sense of urgency. Right now, the current state of the market, there's no liquidity, so you just kind of, it's like, you know? So that could be a lot of what this has to do with, why this person isn't seeing penny stocks respond very well, if at all, to positive news. Okay? Right now, this is a good question. Okay? 5 months ago, this wouldn't have even been a question. The market changes. It goes through droughts of liquidity, and it goes through periods when there's very, very good liquidity. Okay? When there's very good liquidity, you're not going to have this problem in most cases. So, a lack of liquidity in the overall penny market is a big reason that penny stocks with seemingly quote-unquote good news don't seem to get any attention. Okay. Second question. I'm glad someone brought this up because I love talking big words. So, at the end of the day, I was tweeting about the VIX having the tightest range since May 3rd, but then it actually moved lower, so it negated that tight range. But I did make a mention about how it's still the first time since April 24th that the VIX closed at the low of the day. The person wanted to know, as an options trader or big board type trader, they're wondering what this tells me for tomorrow, if anything, and how it affects my bias going into the trading day. Great question. For myself personally, the VIX definitely affects my bias. Okay? It doesn't have to affect your bias. Maybe Apple affects your bias. Maybe JP Morgan affects your bias. Maybe gold affects your bias. Okay? You have to find what works for you. What works for me? Right now, the VIX and oil, the USO, the ETF that tracks oil, are a couple of the main indicators affecting my bias. So what I see in the VIX, okay, I see a couple things that because of this action, my bias is for maybe a little bit more of a bounce here right now. The market seems to be building momentum, supported by the VIX that seems to be suffering some short-term downside momentum. How do I know the VIX is suffering from some short-term downside momentum? Well, like I just said, it closed at its low of day today for the first time since this day on April 24th. Okay, so that's a sign of the VIX losing some momentum. It's closed lower 3 out of the last 4 days. The VIX hasn't closed lower 3 out of the last 4 days since, again, this stretch here, April 20th through the 25th. Okay, so those are 2 signs. And if I look what went on in the overall market the last time, say on April 24th, I see that SPY had just downtrended from a high, okay? And then on April 24th, it actually bounced from 137 up to 141.66 in the S&P 500. That was a bounce from 1370 all the way up to 1415. So, I'm seeing something in the VIX that tells me it's suffering from downside momentum in the immediate term. And I've seen that in the most recent past, which is what I pay the most attention to since I'm a short-term day trader, that the last time the VIX showed a signal like this, coincidentally enough, it led to a nice bounce in the S&P 500, okay? Now, I then want to look at some other things, and so I take my 5-minute chart of the last 2 days, and what I notice is that both times the last 2 days around 3:30, the last half hour of the day, the market was off of its highs, was in a downtrend, but then ripped into the close. Okay? What do you see that happened here at 2:30? The market was in a downtrend off of its highs through the day and then ripped into the close, both times eking out a gain. Okay? So not only do I have the VIX showing me some bearish momentum, but I also have SPY showing me on back-to-back days rallies into the close. That's a constructive sign for me, okay? And now I can use these lows from the afternoon as my stop loss point, just like you would have used these lows from yesterday afternoon as your stop loss point. Why are we using those lows as our stop loss point? Who can give us the answer why we're using those lows as our stop loss point? Yes, bounced from them prior. And how do we define support? I will show you guys how we define support because we've talked about it before on this site. Maybe somebody has the exact definition I'm looking for. Ah, shoot. So the exact answer I was looking for in terms of support is to identify price levels at which a stock has risen from in the past after previously declining towards that price level. Remember, I strongly advise you just straight up bookmark this page right here because it has very, very good reminders just on the simplicity of identifying support and resistance. So the reason we're going to use these as our stop losses is because this was an area that SPY rose from after previously declining towards it. Even though we're looking at a 5-minute chart, we still apply the concept. It doesn't matter if we're looking at a daily, a weekly, a yearly. All that's going to change is your time horizon. So for tomorrow, this level here, 131, 42-ish, just call it 131.40, that is a level that SPY rose from. As you can see, it rose into the close after having previously declined towards that level. Okay? Now, so back to the point about forming my bias and what's going to form my bias. So not only is the VIX giving me some bearish signals, but SPY is giving me some bullish signals into the close, and I have easily identified my stop loss on SPY. So I'm going to say I have a bullish bias as long as SPY remains above what? Yes. As long as SPY remains above this support level. Now that's me, right? Does anybody see here what they could say if they want to have a bearish bias on SPY? What would your statement be? I have a bearish bias on SPY as long as, from looking at this chart, what might you say? Yeah. These highs are right around 132.85. Right. Makes lower high. And that's because we identify resistance as a price level at which a stock has fallen from in the past after previously rising towards that level. If you look, this is a price level that SPY fell from, okay, after having previously rose towards that level. So you could say I have a bearish bias on SPY as long as it remains below 132.80. That's these highs. Or you could say I have a bullish bias on SPY as long as it remains above 132.50. In terms of risk reward, the better risk reward is actually using these highs as a stop loss and going short, in my opinion, because you're closer to resistance and you're farther from your support level. But again, this is all about personal preference, and that's what trading is. It's your unique preferences and how you apply them. So maybe you have a bullish bias, but you say, I have a bullish bias as long as SPY remains above 132.20, because that was a high in the early afternoon, and I want to see a previous high turn into new support. It's all open for interpretation. That's why I love trading, because we can look at the same exact chart and we can all draw 5 to 10 different conclusions or more. But in regards to the overall question, that's how something like the VIX end of day action will shape my bias going into tomorrow. Okay? So it'll be interesting now to see how it plays out, since all of you know what my bias is. Okay, let's do some charts. Well, really quickly before I do that, I want to point out that this whole concept of biases, when I talk about a bias, for myself personally, I'm typically referring to the immediate term, because I'm a trader who trades in the immediate term. But if I wanted to have a broader picture of what's going on and come up with a broader outlook, my bias is bullish going into tomorrow, but say my bias for the next week or the next month. Can your bias for tomorrow be different than your bias for next week, or your bias for the month, or your bias for the year even? Yeah, of course it can. And that's important. That's important to understand, because you need to have an open mind, and you need to understand that you can change your mind. But what is the only thing that should change your mind for you? The market. That's exactly right. The market should be what changes your mind. Not news, okay? Not an earnings report, not a filing, nothing like that. Only after you see a market reaction to some of those events should you then change your mind. One of the biggest mistakes I made, and what I had a lot of trouble with when I started out trading, is I would know that news is coming out, say the ISM index or GDP or the unemployment report, something like that, and I wouldn't trade until that news came out, and I'd look up what the expectation was, and then as soon as the number hit, if it was better than the quote-unquote expectation, I would go long, and if it was worse, I would go short right away. No matter what, just as soon as what the news did, my mind would be made up. How do you guys think that worked out for me? Not even 50%. 50%, that would have been great. It did horribly. I can't tell you, looking back, I think to myself, God, you were so stupid for thinking that a piece of news is what's moving, is what's going to determine the market's direction. But people do it, okay? So the only thing that changes my mind now is the market. And like I said, your bias for tomorrow can be different than your bias for next week. It can be the same. It can be different for the outlook for the next month. For example, on the VIX, as we've discussed, is typically a bearish indicator overall on the market when it's rising. the VIX to me, it looks kind of bullish here. It was in a downtrend. Okay? And it broke out above this downtrend. So overall, my, more intermediate term bias, I guess you could say, my outlook for the next month is more bearish on a net basis because of this action in the VIX, which looks pretty bullish to me. Okay? You have a couple things going on. You've got the VIX has closed above 20 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row while in an uptrend. The last time the VIX closed above 20 9 days in a row while in an uptrend was in late July, early August. Now, of course, it did close above 20 during these occasions here, but that was just consolidation. It wasn't moving. And then it closed above 20. You can see that it closed above 20 to start the year on numerous occasions, but that was in the midst of a downtrend. So I don't treat it the same as I treat this because this is an uptrend. Here, these closes above 90, saying it another way, these closes above 20 here came while the recent history suggested that there was more supply than demand for the VIX. Whereas now, these closes above 20 are coming where the recent history suggests there is more demand than supply for the VIX. That's the key difference between these closes above 20 and these closes above 20. So that's why, my broader bias is to the bearish side. But that doesn't mean I'm not going to take advantage of what I think are some good opportunities on the bullish side tomorrow if they should present themselves. You need to be flexible and you need to be open-minded. Okay, time for some charts. MJNA. Trading had some decent volume day. Obviously, it's on quite the streak. I mean, since the month started, it's only had 1, 2, 3, 4 down days. The problem is that there's just not much liquidity. However, it did break above 6 cents, which it had trouble with for the last 2 or 3 months, so that's good. Now it needs to stay above 6 cents. Let's see if it can turn this 5 to 6 cent range into support. As for resistance, today's high of 6.5 coincides with the high from March 27th of 6.6. After that, the next high would be at 7 cents. Above 7 cents, there's a high at 7.6. Above there, 8 cents. So pretty textbook. If you really want to see a big move, though, it's going to have to trade a lot more volume than this. You can see that even on this day when it traded 6 million shares, it traded it all between 5 cents and 6 cents. So the range was very tight. Good setup though, but just not very liquid. But the overall penny market isn't very liquid, so you got to take that into consideration. The key is that it just holds the levels I just talked about. Oh, goodness gracious. All right. Whoever requested this chart, ask someone in chat why I'm not even going to cover it. I'll give you guys a look, just so you know what to tell him. Sorry. Actually, I'm not sorry. You're welcome. I'm doing you a favor by not covering this piece of shit. GWBU. Okay, so people, there's just nothing really to talk about. Nothing new from yesterday. We stayed above this key low. We said 137 is the low we have to stay above. We got another higher high and a higher low today. That's good. That's the first time we had a higher high and a higher low on the chart since May 17th. So that's last week. So first time we've had that all week. Low volume today. I like very much that it went up on high volume and it's staying near the top of this range as volume has dropped off. Now, usually I say we want to see as much volume as possible. How come I don't mind that the volume has dropped off? How come I'm not calling that a red flag up here at these levels? Other than the fact it's APS. Yes, it's holding its gains. It's holding its gains, okay? After this huge move from 40 cents and after this move from 75 cents on huge volume, it's holding 100% gains. And the volume is very low, which means even after 100% gains, there isn't a lot of supply. Granted, there's not a lot of demand right here either, but after a huge move like that, you have to expect the people who are going to provide demand to be a little cautious about doing so at current levels. They want to wait. They want to wait to see if maybe they get a better entry like they did on this day here on 5/21 when it dipped all the way down to 111. Okay? But if it holds this 142 low and this 137 low from yesterday, I suspect that come next week, maybe even starting tomorrow, you will see demand start to trickle in for fear that they will miss out on a move above this high of 173 towards $2. Okay? Fear is what drives markets, whether it's penny stocks or big board stocks. Okay? The fact that you don't have the price declining after a big gain and you have very low volume tells me those that are holding are not fearful of a big drop. Okay? It also tells me that those who are on the sidelines are not fearful of missing out on a big move higher. So we need one of those things to give way here. Either the people on the sidelines are going to get scared that they're about to miss out on a big move higher, or the people in the stock are going to get scared that it's about to dip. All right? Now, I don't suspect people will get scared unless it breaks this 137 low. I don't suspect people will get scared of missing out unless it can break, this 161 level clearly. 160 really. You can see that 160 has really been the level that's capped it. So until it can really sustain a move above 160, I wouldn't expect a whole bunch of momentum. You've got a nice little channel going here. The longer it consolidates, the more fear that's going to build up in both directions, where when it finally makes that move above or below the prices I just outlined, that's when you'll see that big directional move. Gene. All right, just an absolute explosion today. Highest volume on an up day in at least 1 year. Highest volume all time. Now, something went on today. The price obviously did very well. But if you look, and you look at the volume history, what are we mindful of that a lot of probably happened today? Pennies, just shut up. Yes, lots of dilution. Major, major dilution today. Now, the good news is they diluted in a manner that allowed the price to rise. Okay? Because there was significant demand. But if that demand should slow down, now not only do we have to be worried about the supply that's going to come from the people who bought today, because remember, previous demand is always going to become future supply at some point in time. We also have to worry about the supply that the company is providing in the form of dilution. So we have two types of potential supply to be worried about. Now, Ross G showed us that it doesn't necessarily always matter, and the stock can still make a big move regardless. But you still got to be aware of it. Now, let's look. We had some significant volume trade here in this where it's approaching now. Let's look at the weekly chart because that's going to provide the clearest picture. Okay, so we had a high volume range right here. And this week, the open and close from this range was 640 to 596. Today's high of 620. Okay, so we need to break that 640 high. Well, first we need to break the high of 620, then it needs to break the high of this high at, 652 was the close from that range. Okay, above that, the next major volume range came at this high. Okay, which is $8.10. So it could get a little crazy. However, there's also a lot of volume that traded here. Let's get rid of these. You had a lot of volume from this week back here. And that open to close range is 607 to 770. Now, I know I'm talking about wide ranges, and that makes things difficult. But you have to understand what you're getting yourself into. The stock traded in a range today of 361 to 620. 2 days ago, it traded in a range of 245 to 418. So the reason I'm talking about wide ranges is because it has a history of trading in very wide ranges. So we have to pay attention to them and discuss them. Okay? Now, sold off into the close. However, it managed to hold above what were recent highs. Now, what I like here is, here were the highs from the morning. And what we notice about these highs from the morning around 480 is that that's where the stock found support in the afternoon. So you had a previous high turn into a support. Previous resistance acted as support. Now I want to see the same thing happen with these highs here from the afternoon around 570 or so, or what was 559. So just the 550 to 570 range is going to be key support for tomorrow. Okay, below that you've got these lows here aren't until $5. Again, it's a wide range because it traded in a wide range. As for resistance, you've got today's high of 610, and it looks like it's at 608 after hours. Or no, sorry, today's high was 620. So 620 key resistance. Within the first 5 minutes tomorrow, I would like to see 180,000 shares trade as the price is increasing. If it's going to be a real crazy day and it's going to run up another 20, 30, 40, 50%, I want to see 240 to 300,000 shares trade within the first 5 minutes. Within the first 15 minutes, I want to see a minimum of 350,000 to 400,000 shares. Oh no, I'm sorry. First 15 minutes today, it traded 533,000. So I want to see at least 500,000 shares within the first 15 minutes. Again, if it's going to be one of those crazy type days like it was today, then you're going to see it trade anywhere from 600 to 800,000 shares within the first 15 minutes as the price is increasing. Remember, it does us no good if it's trading all that volume but the price is moving lower. What do we want to see if the price moves lower at the open? In addition to it holding the support level I just mentioned, what else do we want to see? Yes, low volume, low supply. I like that. I like the word low supply even better than low volume. But we know that low volume means that it's low supply. So I'm just being tedious. So yeah, so if it does pull back and the price is decreasing, I want to see it hold the support level we talked about in that 550 to 570 range on 5-minute volume at the open of less than 120,000 shares. 15-minute volume, that would be less than 400,000. Yeah, less than 400,000 shares. All right. So that's it for tonight. And just a heads up, next week on May 31st, I will be traveling out of town, so there will not be any class a week from tonight.